1190 AM, NBC News, and the best in specialty programming.
Welcome back to the Traders Network. I'm Michael Yorba, your host, broadcasting to you live from the Dallas KFXR 1190 AM iHeart Media Studios, worldwide through yorbamedia.com. All right, I'm joined on the show with a reoccurring guest, John Dennis, and he is the CEO of Aro Capital, arocapitalllc.com, and he has brought along with him a couple of guests, Lisa Mollinger and Angel Barta, right, John?
Yes.
All right, good morning. Welcome to the show. How have you been?
Thank you. Very well.
All right, let's do this. It's been a couple of days since you were last on the show. Give our audience a little flavor for you, what Aro Capital does, and then let's introduce your guests and talk about what they do and what we brought to the table today.
Good. Well, we, of course, engage in capital raising for various types of funds, private equity, venture capital, and hedge funds. And Lisa and Angel are instrumental in being able to obviously locate those types of talent that would be obviously affiliated in those different areas.
Okay. All right. Give us a floor and a sweet spot for the type of capital raising that you do, and so that the audience gets a full flavor of because everybody says we help raise capital, but then some people don't fit that mold.
Right. Well, we typically we're more of a niche firm that works in the lower end of between $100 million and $500 million, where many of the emerging managers are located, and we specialize in those types of emerging managers.
Okay, all right. Now let's bring your guests on, Lisa and Angel, and tell us what they do, and then we can start talking about the particulars.
Good.
Lisa?
Yes. Hi. How are you?
Hi. Welcome to the show. How have you been?
Good.
Great. And then is Angel still there?
Yes. Hi. How are you?
Hi, Angel. I'm glad you both could come on. Tell us about your company, what you guys do.
So our company, we were founded in 1987 by Scott Grossman, president and CEO of the company. The company was created with the purpose of identifying top-tier candidates within the financial services industry in order to meet all of the diverse and unique needs of our clients and to offer challenging, rewarding opportunities to our candidates. So we like to pride ourselves on the fact of being able to successfully have our candidates advance in their careers within our clients' organizations. So exceptional performance and career advancement of our candidates have allowed us to enjoy a proven history of success. In 2012, we moved to Midtown Manhattan in order to expand our office as well as strategically position ourselves to be located near all of the headquarters of many of the largest financial services institutions such as BlackRock, Jefferies is across the street from us, JP Morgan. We have everyone near and around us, making it easier for us to meet with clients, meet with candidates, really build out relationships with everybody that we speak to. So we really, excel in being able to establish personal relationships with all of our candidates. Our convenient location gives us that unique ability to properly assess the skills and the qualifications of each candidate and identify which positions they would be a match for. By, personally meeting them, you get to get a sense for, they're going to fit in with this firm culturally, they're going to fit in with that firm, the personality fits in better here. So it really depends, There are about 110 firms on Wall Street that do what we do, and there are about 10 that have the clients that we have. So we have to distinguish ourselves from those 10 somehow. We do this by making sure to build ongoing relationships with each individual candidate and understanding what they're looking for going forward, as well as their current experience and knowledge and what, they're able to do going forward, given their skill set. Most of the people that I now speak to come from those who I already know, who give me referrals for specific roles that I'm working on. So it's very, obviously relationship building, but also matching up what our clients will be happy with as well as what our candidates will be happy with going forward. That way, our candidates are happy for a long period of time, our clients are happy for a long period of time, and hopefully one day our candidates become our clients.
That's a well-rounded view. Thanks, Lisa. All right, now, John, you had specific reasons for inviting Lisa and Angel as your guests. Let me back up a little bit and give you the floor, and then you take it from there.
Well, yeah, in talking with Lisa and Angel, I think that one of the things that I focused in on that is that as we're growing, obviously we need candidates, and I wanted to get a flavor from Lisa and Angel about what type of marketplace, is the employer's marketplace? Is it an employee or an employer? And she was able to give me a better flavor of that.
Lisa?
So, there obviously has been a fundamental shift from employers to an employee's market. So pre-crisis, there were plenty of jobs and not as many folks looking to move around. During the financial crisis, there were no jobs and a lot of people looking. Those in stable environments stuck it out and were able to keep their jobs through the crisis, but they didn't see much of an increase in pay or promotions or anything like that. And then during the crisis, if they had a stable job, they were just happy that they had an income coming in. Now that the market has picked up, there is a tremendous amount of hires needed, both replacements as well as additions of staff. We've noticed a lot of people playing musical chairs, and we are filling in those seats, as most of these people haven't looked for new jobs since the financial crisis. There's also a ton of new needs, as many alternative firms are now bringing operations and accounting jobs in-house because investors want more transparency. So most alternative firms like to hire junior candidates, mold them into their type of professional, and, kind of groom them up through the organization, as opposed to teaching an old dog new tricks and hiring a seasoned employee to come in and take a high-level job. They usually just hire from within for the more senior roles. They then take, they move them up through the organization and hire another junior candidate to take that person's spot. So the market is very competitive right now, and there are a lot of people looking, as they haven't looked since pre-crisis, which means employers can afford to be pickier, and it makes it harder for candidates to get the job they want, as they need to meet 10 out of 10 of the qualifications needed, as well as be a personality and culture fit for the firm. On the other hand, employees, they also have a ton of options, well, depending on their skill set, of course, if it's valuable in today's market. So, given the regulations or capital raising, if they have any of that in their background, they can be marketed to many different firms. Therefore, they have many options to explore prior to making a decision of where and what type of firm to go to. Like, I recently had an employee candidate. He was a fund accountant. He was a CPA and all. But he only wanted to look at opportunities that were hybrid operations accounting so he can gain more exposure. I had him interview at about 10 different funds, and he was making it to final rounds at every firm, but he kept getting beat out in late stages by someone who had that operational experience as well as the accounting piece and was a culture fit and was a personality fit. So he kept asking me for feedback because he felt he was doing something wrong. He's like, Lisa, what is wrong with me? Why do I keep getting beat out? And, all feedback was positive. But this goes back to the fact that it's still an employer's market and they're able to be picky. So the only reason he was even making it to final rounds was because he was very personable, he was very likable, he was very polished. But when it came down to hiring, those that met all of the qualifications beat him out. So he did finally land one of these hybrid roles at a PE firm. This was due to his consistency and actually going for 2 to 3 rounds at each firm. That's almost 30 interviews that he had to attend before actually landing a job, whereas the, pre-crisis hiring, he probably would have gotten that job much faster because he would have only needed to meet, 5 out of 10 of those qualifications and fit in with the team, and he would have gotten the job.
All right. Where now that I see what's going on, and John, you'd mentioned how many private equity firms have shown up this year?
Oh my God, there's almost 2,200 this year that have raised already over $210 billion in the first 6 months.
All right. Well, based on what Lisa just filled us in with, and by the way, I didn't even bring your company out, Dynamics Associates, and it's Lisa. The web address is Dynamics. Dynamics
It's
NY?
dynamicsny.com.
Thank you very much. All right, but let me get back to the question with you, John, and Lisa. You can chime in at any minute. We got about 2 minutes left in this segment, but based on what Lisa just said, where is the investment money gravitating towards?
And I think it's broadly across alternatives and PE, mainly PE, but I see some growth coming back a little bit in the hedge fund market. And Lisa, what are you seeing?
Right, Lisa.
So, obviously looking at it from a pre and post crisis and taking a look at the, perception of employees based on the shift in the market, a lot of the money is now gravitating towards one of 2 areas. It could be either, venture capitalist firms as well as technology. Venture capitalist firms are always looking for the next big thing in innovation, where startups and venture capitalist firms that fund them are all extremely attractive investments, since everyone is trying to be the next Mark Zuckerberg or Sean Rad. That's the guy who created and owns Tinder. So those seeking more traditional and secure investments have seen a shift back towards the investment banks investing in traditional vanilla products without the complexities of derivatives. But people nowadays want to understand what they're investing in. So as per John Dennis, there's a huge shift in wealth out of pensions and into registered investment advisors. This is only going to accelerate over the next few years because the market's volatility, as well as the RIA channel, continues to expand. That's where all the money is going to be.
All right. Lisa, sorry to cut you off on this, but we got a little bit of a break we need to take, but we have much more ground to cover on the other side of this break. All right, we'll be right back on the other side of this break with John Dennis, his CEO, Aro Capital, and we've got Lisa Mullinger. Maybe we'll get Angel Barta in on the conversation, head of alternative investments, director of alternative investments for Dynamics Associates, on the other side of this break. We'll be right back.
From the North Texas Traffic Center in Dallas, 175 westbound at Pennsylvania Avenue, an accident still out in that right lane. We are seeing delays from Lake June Road. Out in Arlington, 360 northbound before Avenue K, an accident tying up your two right lanes as well. We are seeing this delay pretty heavy right now from Arkansas Lane. And in Garland, 635 LBJ Freeway northbound at Northwest Highway, disabled vehicle tying up that left lane. I'm Heather Anderson with your KFXR Traffic.
It's more than just a game.
To the 40, 35-30, 25-20, he's going to score!
It's a passion.
Ball is picked up. Red Raiders have it down at the 25-yard line.
It's a lifestyle.
Touchdown, Red Raiders!
Hear the action all season long, right here on the Red Raiders Sports Network.
Next up for the Red Raiders, they take on Oklahoma at Jones AT&T Stadium in Lubbock, Saturday, November 15th. Check out all the action here on 1190 AM.
When Marlon Shirley was 5, he lost his foot. Today, as the world's fastest amputee, he runs the 100 meters in less time than it takes to listen to this. Overcoming. Pass it on. From the Foundation for a Better Life.
I'm Dr. James, founder of Diamond Physicians, a concierge medicine practice located in Dallas, Texas. Our Diamond 360 Advanced Physical Exam has been created for people like you who live a high-stress, fast-paced life. Every 40 seconds, someone in the U.S. experiences a life-changing heart attack or debilitating stroke. Negative stress tests and normal cholesterol levels do not exclude you. Half of all fatal heart attacks occur without warning. Diamond goes beyond traditional medicine with the Diamond 360 Advanced Physical Exam, proven to prevent heart attacks, strokes, and diabetes. Contact Diamond now at 214-395-3491. That's 214-395-3491. Or visit our website at diamondphysicians.com to take the Diamond Challenge. If your Diamond 360 reveals perfect health, receive a full refund. Your loved ones will thank you.
Are you keeping pace with the change in business development technology? Make the job of your sales team easier and lower cost. The world is moving to mobile apps. Digital publishing is the way of the future. For less than $90 a month, Cookie can create a professional mobile app for your company. If you don't have one now, you'll be left behind. Make marketing more powerful, more successful. Big results don't need big production and big costs anymore. Contact Cookie.com now. Cookie is the solution for you to create content live, easily, and fast to your own mobile applications. Cookie.com, Kooke.com.
From the Mini Cooper Weather Center, today mostly cloudy and windy, high of 73. Tonight cloudy, low of 67. This report is brought to you by EarthCam. WorkZone Cam's plug-and-play systems are reliable, simple to install, and can be purchased with no monthly fee. Providing a professional job site webcam is now easier than ever. Visit WorkZoneCam.net for details.
Welcome back to the Traders Network. I'm Michael Yorba, your host, broadcasting to you live from the Dallas KFXR 1190 AM iHeart Media Studios and broadcasting worldwide through yorbamedia.com. All right, I'm joined by John Dennis. He is the CEO, Aro Capital LLC, and his two guests, Lisa Mullinger and Angel Bartha, head of alternative investments and director of alternative investments, Dynamic Associates, and it's dynamicsny.com, right, Lisa?
Correct.
All right.
Dynamicsny.com.
Dynamics NY. Thank you very much. All right. Well, we were talking about where the money's going, what's happening pre and post crisis shift in the industry, in your industry. But John, let me back up a little bit because there's some things on background, regulations, fundamental shifts in employers that you wanted to cover, and I'm going to let you come into the conversation and work with the two of these ladies on these topics.
Yes, thank you. And Angel and Lisa both feel free to add your points of view. And I've seen a shift based on with the alternatives, with the private equity, with the venture capital growth, based on the credit markets. The tightening of credit from the banks, obviously, I think has created a shift towards more funds. What have you guys seen in the employer's employee marketplace from Dynamics?
I'm sorry, what was that? You were breaking up.
No, I was saying that the regulations on credit tightening from the banks, I've seen a shift in various funds away from the banking industry more to the PE/VC industry. And I wanted to get your take from an employee-employer marketplace, what you guys have seen.
So Angel's going to speak regarding this topic. Well, we've definitely seen a shift based on the post-crash perception from an employee standpoint. We see that most people are looking to get to the alternative industry as a way of, one, to get an increase in compensation, and two, to escape the regulation-filled landscape of the investment banks, because they believe that by allocating their assets to a private equity, hedge fund, venture capital, or any asset management firm, that they will have a greater return on investment and receive higher tax benefits. Obviously, this is only a perception and not necessarily true of all firms. There are some major changes currently in play with the way the alternative investment firms are being perceived. People are waiting to see if the regulators will go after these firms. We see investment managers fighting against Dodd-Frank and giving pushback, and so far it has been working, but the question becomes, how long can they keep them away for? Employees generally tend to enjoy more of the perks on the alternative firms, such as the entertainment rooms, the pool tables, lunches. The major difference, I'd say, between the alternative investment and the banks is that the monetary reward is much higher for top-tier employees.
Okay. All right. What about the regulations? I mean, let's drill down into that, and any of you guys can chime in on that, because we've got some changes.
Yeah, no, there's a ton of changes going on, and in terms of just the regulations in general, right? We've noticed that most of them want to join an alternative investment firm based on the regulations working at the banks versus the funds. The funds have become more attractive because there's no oversight as to the amount of money they can compensate their employees. So riskier types of investments lead to higher monetary rewards. As far as regulations go, that's complicated and constantly an evolving question. The bigger funds are now being scrutinized but aren't nearly as regulated as the banking community. The alternative sector is mostly focused on the insider trading regulations as opposed to capital reserve. For instance, the regulations such as FATCA force the alternative firms to report foreign financial assets and are taxed as an investment opposed to an income. So basically, any firms that have capital in foreign bank accounts now must report this
as a taxable investment, where previously they did not need to disclose this information.
Interesting.
Like after the crisis, banks were forced to create a bank holding company, which forces them to be backed by the government. And this was put in place in order to make the banks less risky, as they now need to have a certain amount of capital on reserve, whereas alternative firms are not subject to these regulations yet, at least.
Let me move forward here just a little bit on the conversation. We only have so much time, and I want to cover some more ground now. John, if you could come back in here and open up the conversation about managing the compensation expectations and the topics that go along with that.
Right, and I think that that area of the market has really dynamically changed as well, and I'm sure Angel and Lisa will be able to chime in on that. And I think that from what I've seen within my own firm, as that shift has led more to private equity and to venture capital and hedge funds, I think so has the shift in higher compensation. And Lisa and Angel, what have you guys seen?
I absolutely agree with you, John. I've seen that more and more firms have shifted towards a total compensation structure, both on the buy side and the sell side. By managing these compensation expectations, we're very upfront and realistic with our candidates. We let them know getting a 50% increase on their base is completely ludicrous on the finance side. Typically, in any job move, a candidate will see between a 10 to 20% increase on their base compensation. Exceptional performers might see a 30% increase, but not significantly more than that. Low-achieving performers typically take either a small percent increase between a 5 to 10%, or some even consider lateral moves just for the opportunity to do something new and challenging, or if they see growth potential in the firm. So we really make sure to educate our candidates when moving from sell side to buy side and let them know it's about the entire package. So the bonuses are typically much higher at buy side firms depending on the firm and the individual performance. We have to educate candidates coming out of Big Four also who barely see any bonuses. So to them, a bonus is almost a fairy tale, right? So we let them know that by making the move to the alternative firm, it's more important to remember that the increase on the base will not be tremendous, but the all-in compensation is incomparable to anything that they will see at public accounting firms or even a bank at a junior level. So for instance, we've recently had a junior candidate coming out of one of the Big Four firms who took a job at a private equity firm for about a $2,000 increase on his base. As he was more knowledgeable about the market, he cared about the firm and the opportunity that will provide him as opposed to his base salary. So seeing this as a bigger picture and this mindset will tremendously help anyone advance in their career.
Thank you very much. Was that Angel?
Yes.
All right. Listen, we're going to have to wrap up the show for now. We've got a hard break that we're up against. Please, everybody give us your contact information. You brought a lot to the table today.
Contact me at lisa@dynamicsny.com.
Angel?
And you can contact me at angel@dynamicsny.com.
Great. And John, please, contact information, and thank you for bringing these two great guests to the show.
Thank you. And yes, it's John Dennis, DENES, at Aro Capital, LLC.com.
Perfect. All right. Thank you so much, everybody, for joining in the show. Really appreciate all of the enthusiasm we've gotten off the internet and the replies. And good luck, good trading. We'll talk to you again.
Thanks for listening to today's program. The Traders Network is a production of Yorba.tv LLC and is streamed live and archived at yorbamedia.com. We invite you to listen live, join in the conversation real time, and link to the Traders Network on the Yorba Media website. All opinions in this show are that of the presenters or their guests, and not of this station's owners or management. These opinions are for educational purposes only and should not be interpreted as investment or financial advice. All investments involve risk, and past performance is not indicative of future results. Tune into the Traders Network every Monday through Friday afternoon here on 1190 a.m.